Here we are on a housing market update, October 10th, 2020. All right, guess what? We're starting to see some cracks in the market. Today, we'll talk about Florida and the bubble indicator. Go ahead and subscribe right here. Definitely like this video. It's free and helps the channel out. And leave us a comment down here to talk about this and what you think about the Florida market. We'll be talking about Tampa, Orlando, and Jacksonville today. One of those is on our perfect, beautiful Case-Shiller housing bubble indicator chart that we'll show you. And we'll go into it here. Last time in the great financial crisis, the foreclosure crisis that we had, Florida got hit extra hard. It was crazy down there. I remember I was there. I saw townhouses in blocks of 4 being built that they just stopped. The builder folded up and abandoned the project, leaving half completed, 3/4 completed, and completed blocks of townhouses just sitting there for years. It was ridiculous. There were tons of foreclosures and they got hit really hard because nobody had money to go down there and spend on tourism. So anyway, that's what happened last time. History doesn't necessarily repeat itself, but it definitely rhymes. With Tampa, Orlando, and Jacksonville, we'll go into a couple of Movoto charts, little spreadsheets, I guess, little comparisons of these markets, and go from there. The first thing we'll do is check out the Case-Shiller housing bubble indicator that we love to use on this channel. Trust me, folks, this is a horrible chart and a horrible way to estimate home prices because it's so delayed and covers very limited markets within the U.S. In fact, it only covers these markets if you select the top 20. They can combine the entire USA, but you're missing out on smaller areas, and we'll have an example of Brandon, Florida, which is a nice suburb of Tampa, that is really not included in here and has its own housing market. So back in the GFC, this gray line right here is the Tampa market, and this blue line is the overall US market. So you can see that Tampa kind of went through the roof and peaked out in May 2006. And July 2000, August 2006 started to go down. So September 2006, we saw a decrease. We'll demonstrate that shortly on the Tampa market trends. So here's the deal with Florida, people. When nobody has money, they don't go there to spend it on tourism. You have things like Disney, you have beaches, you have Clearwater, Florida, which is always rated one of the top 10 beaches in the United States. You have Miami. All of that suffers when there's a recession, which we're in right now. This chart is not indicating the recession, but it's there on the normal Case-Shiller bubble indicator. So anyway, you see the normal home prices were below Tampa then, and Tampa was below normal U.S. house prices before that. Let's compare that to today right over here. You see Tampa has not appreciated as of July 2020. One reason this chart is kind of garbage is because there's a ton of houses on the market right now, but the government can't get off its butt, or Case-Shiller can't get off of its lazy butt to update this chart quicker than 2 months in the past. So, like I said, we're in October right now, and this is through the end of July 2020. We're approaching 3 months, and this chart has not been updated. It's kind of stupid. It's like 90 days behind. That's just dumb. Okay, anyway, U.S. house prices are above Tampa at this point, so Tampa may not indicate a bubble. But this isn't adjusted for inflation either. But what we saw here was the prices peaked in May 2006 and started dropping in August 2006. So there were, I don't know, how many months is that? 3 months, 4 months there before they started to drop. But when they did, they didn't go back up and the bubble burst. That would be a bubble right there. All right, now we'll go over to a chart of Tampa. Here we are looking at Tampa, and again, I always say chart, but this is actually a spreadsheet that Movoto provides. I switch it to single family because I don't care about condos and townhomes. I invest in single family houses. This isn't financial advice. It's not investment advice. Don't listen to anything I say. My situation is completely different than yours. I've been doing this for, I don't know, like 15 years. Witnessed 2008, so can kind of speak to history, but not to the future. I'm not a fortune teller. Don't listen to me. Okay, so anyway, Tampa shows total inventory. You see year over year, it's down 45%, which is really good. It means the market's still hot. People are buying things. But like we saw on this chart here back in May 2006, it peaked and dropped a little and never really went back up. What we'll be watching for over the next few months is for Tampa to do this and not pick back up. So here you go. You see that inventory now is up 5% compared to last month. So that means it's peaking. If it wasn't peaking, there'd be more houses on the market. I would say that's an indicator that it's peaking, not that it is peaking. So another thing that shows that it may be peaking out at the top of the bubble there is that home prices are down about 10 grand from last month. So we saw a 2% decline in prices when we were seeing 16% pretty regularly year over year. So if it's not appreciating anymore, people are going to notice that, place more houses on the market, which affects inventory and then affects prices because they have to put them under their neighbor's house to get them sold quickly. Still, distressed homes. We've talked about this before. Today, there are 0% distressed homes. And 1 month ago, there were 0% distressed homes. That is because everybody is in forbearance if they can't pay their mortgage and because banks can't foreclose on any home that has an FHA loan on it. So median days is the other indicator that a bubble is starting to peak. And median days is 8% less than 1 month ago. So people are buying houses a little quicker, but there's more inventory and prices are coming down. So you'll see all of these. You'll see this right here in particular go to plus 8% or plus 10% when the market is starting to really decline. Right now, you have two things here that are showing a decline and one thing that's showing an increase. So they're offsetting each other, and that would be what we would call a peak in prices. We'll see what happens over the next couple months and go from there. So here's a map of Florida. Tampa is right here if you don't know, or if you're not from here. That's kind of halfway through Florida on the Gulf Coast. We'll go to Orlando next. It's kind of a sister market to Tampa, but Case-Shiller doesn't really care about Orlando apparently because you can't select them on the Case-Shiller bubble indicator. So Orlando says, hey, our inventory is up 1%. That's great. We have another 30 or 20 or so houses on the market. Hey, good for them. It's minus 30%, 38% year over year. Prices today, they're down, $1,100 there. So we're down on price. We are up on inventory, and we're up on median days on market by a whole 1 day. So maybe it's just taking loan officers longer to close a dang house, which is totally possible. But you can see all three of these things here compared to last month right here. Are indicating a peak. They've stalled out. There's still 0% distress, 0% distressed 1 month ago today. Blah, 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 all of that. Because, again, can't foreclose on a house, and everybody's in forbearance if they can't pay their mortgage. In most cases, it's automatic. So, okay, here we go. Next market. So now we'll go to Brandon, Florida, which is right about here, just to the right of Tampa. That would be to the east if you are using a compass for this video. And it's right here. So Brandon is a nice suburb of Tampa. Okay, so you can buy houses in Tampa, of course, but you can also buy homes in the suburbs. I've lived in this area in the past, the Tampa area, and know it pretty well for all the suburbs, been all over there back and forth, all that stuff. And what we're seeing is minus 8% for total inventory. So people are still picking up houses in the suburbs, and minus 53% year over year. It's kind of a limited area. It's a smaller little town outside of Tampa, suburb. So you only get, a smaller snapshot of how many houses there are. But you can see the prices went up. Total inventory went down, and median days on market went down 23%. So people are still buying in Brandon, Florida. That bubble may not have peaked yet. And we'll go back to our chart to demonstrate a little bit of this. So let's say we're like right here, right now, where things are peaking. We're in October 2020. Let's just say that's July 2006. So what that means is prices are going to come over here, and we'll draw on this. There we go. Now I can draw. So, we peaked right here and came down, and it didn't go back up after that, right? Like you didn't see this thing happening, right? It just kind of went down for a while. So if this repeats itself, remember history rhymes. It doesn't repeat itself. It just rhymes. So if today rhymes, I guess, with 2006, we'll see something like this happen into October, and then it'll crack and start going down. And that's what you will see over the next, I don't know, how many months is this? It looks like it's about 5 months as a trend. Then you know the market's going down. So we would be somewhere around, guess what? March 2020, when everybody's forbearance runs out. Or not everybody's, a lot of people's forbearance runs out. And then you could see even more of this happen, where it's just a straight decline. People trying to get rid of their homes. So you can see we're using this chart here as a visual reference for what could happen. We have the drawing right here of what may happen, and this would be like March 2020 right through here over, by Cleveland. That will also crash because Cleveland is a crap hole. No offense if you live there. I've been through there too, and it's not the best place. It's a lot of snow in the winter and really cold all winter long, then super humid in the summer. Like I said, sorry if you live in Cleveland. My bad. But anyway, you'll see this happen over the next 6 months if we are indeed peaking out right now. And we'll do another video like this in November 2020 to see if our little indicator here, our chart, is predicting for us, because we don't predict, we just look at charts. If we're going into a downslide in those markets and housing prices. And we'll go over to Jacksonville just for a little more reference. This is Jacksonville. It is right up here in Florida, the very northernmost part in Florida on the East Coast, on the Atlantic. You can go shark fishing out here in the water if you want to. It's that close. Okay, anyway, that's enough of that. Okay, all right, so in Jacksonville, we're up on inventory. We are the same on prices, and we are down on median days on market. So we have the same, we have down, which is good if prices are going up, and we have more inventory that is bad if prices are going up. Remember, inventory bad if prices are going up. It causes prices to go down. And then median list price is the indicator that prices are dropping. And days on market going up is an indicator that prices are dropping. Kind of far into the video to explain that, but whatever, there's smart people listening to this channel, so you probably knew that already. All right, we looked at all those markets, Tampa, Orlando, Jacksonville, and a suburb. We saw that inventory is going up in the cities, and in the suburbs, inventory is going down. Time on market is going up in several cases and going down in others. Because we have indicators going up and down in a lot of these places, that would mean we're likely to see a peak in the prices, just like in 2006. That could be coming. We have another video. I'll link it right here on what could cause a housing market crash, not a stock market crash, because the government's just going to go ahead and buy all of those stocks and not let them go down. Anyway, okay, back to the slide. So cracks in the housing market are appearing halfway through October. I mean, technically a third of the way through October, but whatever. So beware of that. Keep an eye on it. It's possible that next month we will start to be able to confirm a downturn in at least the Florida housing market because of people running out of forbearance. people maybe possibly putting their homes on the market before a foreclosure could happen. All right, like I said before, subscribe here. There's another video to watch here. And right here, there's a subscribe thing too. Definitely leave a comment if you agree or disagree with this assessment of the Florida market. We ignored Miami because who cares? All right, y'all have a good day out there. We'll talk to you later.